I think in the near term, de-dollarization is probably overstated. It's easier to say something like, it's easier for BRICS nations to say we're going to do something than to actually agree on it, build it, make it credible, and start using it at significant volumes. India and China and the BRICS nations in general become a larger percentage of global GDP than the G7 eventually. In the near term, I think some of these moves are, while they're happening, I think people might overstate the speed of them happening. So for example, de-dollarization is not really a big theme for my, say, 1 to 2 year Bitcoin outlook, but I think it does factor into, say, a 5+ year Bitcoin outlook.
There are an estimated 106 million Bitcoin owners globally, 400,000 daily users, and 200 million active users. 53 million people trade Bitcoins, and there are Bitcoin wallets, according to data from Buy Bitcoin worldwide. Despite being a remarkable accomplishment for a relatively new asset class, this challenge to the existing global finance industry's centuries-old structure is noteworthy. Before the top cryptocurrency asset can even begin to approach its full potential, many more reliable owners and users need to join. Retail investors led the way in the adoption of Bitcoin during the first decade. Institutions took the lead in the adoption of Bitcoin during the second decade, but both phases of adoption have faced their fair share of difficulties. The US's regulatory onslaught on cryptocurrency and companies that deal with cryptocurrency is the most recent. Additionally, there have been numerous rumors regarding Operation Display Point 2.0. The coordinated actions taken by US regulators to prevent the whole cryptocurrency industry from accessing banking services in the United States as well as in other nations that are US allies. Renowned financial analyst Lyn Alden claims that while the first threat doesn't exist for Bitcoin, a second one does. Alden thinks that the choke point, which is now being implemented, poses a short-term but significant threat to Bitcoin because it would further deter institutional adoption. The investment strategist recently spoke with Michelle Macquarie of Kiko, and they also discussed the sovereign acceptance of Bitcoin, which is currently taking place concurrently with institutional adoption. Alvin thinks that the current efforts by some nations to de-dollarize will have a significant impact on the adoption of sovereigns, notably those who are part of the BRICS alliance and their allies, to dethrone the US dollar as the world's reserve currency. Although Alden does not think the dollar will be overthrown right once, she explains that plans are already in motion to at least create a multipolar world. We will now show you excerpts from Alden's enlightening interview with Kiko News, in which the financial analyst expresses her opinions on de-dollarization, regulation, and the place of Bitcoin in a world that is becoming more multipolar. To ensure that you never miss one of our next videos, please watch the video through to the finish, subscribe to the channel, and enable post alerts.
I think there are kind of two different buckets here that are happening simultaneously, and they're somewhat overlapping, and sometimes the narrative gets confused between them. So on one hand, you have a lot of crypto things that are potentially violating securities laws, that they passed the Howey test, that they are essentially securities, but they haven't registered as such. And therefore banks are less likely to want to bank entities that are potentially engaging in securities fraud. And you have the government kind of taking pretty aggressive actions behind the scenes to try to get those companies to have more banking frictions. So that one I think is probably going to be with us for a while. Bitcoin itself has a clear regulatory picture from a security standpoint. The chair of the SEC, the chair of the CTFC, like Commodities Futures Trading Commission, multiple different regulators have pointed out that Bitcoin's not a security.
Yeah,
it's a commodity.
Yeah.
It's very clear in that front. I think the threats to Bitcoin are not securities related, but they're more choke point related. So it's either trying to kick miners out of the country, or trying to increase the frictions of getting money out of fiat currency into buying Bitcoin, similar to what we've seen in developing countries. It's kind of a funny thing where if you see a government move to restrict your access to Bitcoin, it's actually kind of an advertisement that you probably need Bitcoin.
Right.
Because if they weren't threatened by Bitcoin, there'd be much less reason to do that. You generally only see that in countries that are having pretty severe currency problems. But because the United States and European Union are large enough and responsible for a significant percentage of capital flows, that does pose a price risk with any sort of, let's say, 18-month or 3-year period for Bitcoin if they were to aggressively go after choke points. Basically say that, it's still legal to hold Bitcoin, but the banks can't send money to Bitcoin brokers, crypto exchanges, anything like that, it would kind of narrow the fire hose of, yeah, I think that's one of those things that would damage it for a number of years, because especially institutional capital would be much less willing or much less able to get into it. I think we'd have to ask what is happening at that time that causes them to make such a drastic action, right? So the United States is this environment that encourages, innovation. It encourages rule of law, open markets, no capital controls. And if you start to get those types of capital controls, or those types of industry-specific crackdowns, you'd have to ask what's happening. Why are they so concerned about the dollar or so concerned about the rise of Bitcoin that they would take such extreme action? And I think it's kind of like Nigeria and Argentina, maybe less extreme, but in those environments, when they cut off Bitcoin, again, it's a really good sign that you probably want Bitcoin, because something's not going right with the currency that would trigger such extreme action. I think in the near term, de-dollarization is probably overstated. It's easier to say something like, it's easier for BRICS nations to say we're going to do something than to actually agree on it, build it, make it credible, and start using it at significant volumes. So, we've seen kind of a period of de-dollarization. I think the long-term trend towards de-dollarization is clear. Basically, this kind of period is somewhat unnatural to begin with. If we have a country with 5% of the world population, but we're responsible for like 90% of international currency swaps, that's kind of a long-term unsustainable situation anyway. We've seen, for example, as India and China and the BRICS nations in general become a larger percentage of global GDP than the G7 eventually, that does result in an inherently more multipolar world, and that necessitates a multipolar currency world and a multipolar payments world, so that one country can't just shut off payment systems of a country that's actually in some ways larger than itself. That wouldn't make sense. In the near term, I think some of these moves are, while they're happening, I think people might overstate the speed of them happening. So for example, de-dollarization is not really a big theme for my, say, 1 to 2 year Bitcoin outlook, but I think it does factor into, say, a 5+ year Bitcoin outlook. I think that kind of like how when you have de-dollarization, there's more interest in central banks in gold as an asset.
Record buying, yeah.
Exactly. I think so. Right now, Bitcoin is generally too small for most sovereigns. You have some smaller ones like Kingdom of Bhutan that's mining Bitcoin. They're able to kind of get into that space, but it's not large enough to be really a sovereign reserve asset. I think if you have another couple cycles of Bitcoin growth, and you add to its market capitalization, to its liquidity, reduce its volatility, I think it could become a relevant sovereign reserve asset for some of these countries that want more independent, unsanctionable reserves that they can also use as unsanctionable payments. So I do think that Bitcoin is one of the solutions they can turn to, but right now it's, except for the smallest countries, it's still in many ways too small for these bigger sovereigns to fully take it seriously.
Do you see Bitcoin being owned by central banks in 10 years' time?
10 years' time, I do. I think it starts with the smaller ones, and it also starts with any of these small countries that not only maybe want to hold Bitcoin, but they want to signal to Bitcoin companies that they're a friendly jurisdiction. So whether it's El Salvador or Switzerland or Liechtenstein or Dubai or Singapore, whatever the case may be, these smaller countries can say, we're a neutral ground. We're conducive to working with you. If, for example, the United States makes it a pretty hostile place, then they can gather some of that business. So I think there will be probably havens. Those havens might grow in size, or kind of medium-sized havens might also want to enter that market. But I think as you get a decade in the future, I wouldn't be surprised to see larger sovereigns own Bitcoin.
The need for its censorship resistance, mathematically secure a scarce asset established on an incorruptible network, will be obvious to everyone after the dust settles, regardless of the threat to the United States and the dollar's domination. Investors who rely on the US dollar and other fast depreciating fiat currencies cannot say the same because they continue to do so. Investors will gravitate towards Bitcoin, the soundest and hardest form of money in a multipolar world, as they seek stability and security. Describe your feelings regarding Lyn Alden's interview. In the section below, please share your thoughts and views. Be sure to set on post alerts for future videos like this, subscribe to the channel, and indicate your appreciation for this one. Many thanks for tuning in.